showing the ultimate men's movement with our host, Dr. Jack Rocco. Dr. Jack, we have a really interesting guest today. I've learned so much from this guy. I produce his podcast as well. Who's our guest today, Dr. Jack?
Yeah, and this is the perfect time of the year, the end of the season. Everyone's thinking taxes, ways to optimize. So we have Michael Aguas from the Reignstorm Group out of New York, and he's going to give us some advice on what business owners or high income individuals can do towards the end of the year to help them with taxes for the next year. So welcome, Michael. Thank you for joining. Glad to
Good
have you.
morning. Thank you for having me to be
How's
here.
the weather down there in New York? Is it getting cold or
It is chilly.
Yeah.
Goodness, we're waking up consistently to the mid-20s.
Yeah, I know. It's the first snow. I've heard it's going to come soon, so let's stay
Yes.
warm there. So,
Yes.
Michael, go ahead. I gave a little introduction to your company. I'll let you introduce yourself and your company, your niche, that people that you work with. So, go ahead, take it away, Michael.
So, good morning. And again, thank you for having me. So, we at the Reignstorm Group are tax strategists. I do want to make that distinction from the word tax advisors because we are not tax advisors. Those are mostly our clients. They're the ones who bring us the ultimate client who is paying a lot in tax. So, as a tax strategist, what's the difference? We share ideas. We share different concepts that could help lower your tax, sometimes eliminate it. Okay, but whether it's for you or not, we always defer to you talking to your CPA or tax advisor and basically determining, because that's the part we don't know. Is it the right thing for you? We can always share ideas. And once I hear a situation, I could narrow it down to one or two. But again, whether or not it's for you, that's a matter of conversation with you and your CPA. So that's how we work. Primarily, we teach CPAs overlook sections of the tax code. That's how we get clients from them. We work together. We're a sounding board. Maybe or maybe you don't know, and your listeners don't know, is the fact that a lot of CPAs are not into planning. They're into reacting. Give me your books, give me your statements, give me everything you've got, your schedules. I'll put together a tax return and pay the tax. That's typically how it works.
Okay.
And people don't do themselves a whole lot of service when they think that there's going to be some planning and some tax savings because I have a CPA.
So you get involved with people a year before maybe, or 2 years before, and start them working on long-term strategies for that. Is that kind of what you're saying?
It's my preference, but in reality, here's how it sounds. Michael, I'm about to sell my company in about 2 weeks. I heard about you. I heard you got some ideas. Can you help me out? What can I do to lower tax? So
that's
that what you're
hitting the
saying is
fan.
ideal. Yeah,
Yeah.
what you're saying is ideal because you should be on a program. You should have a strategy. You work hard on your business, but how hard are you working on retaining your profits?
hmm
What is your biggest expense? Oftentimes the answer is tax.
Yeah. Now, what kind of clients do you deal with? All sorts of businesses? Do you have anything? Is it technology? Is it business, real estate? What, all sorts, huh?
So I'll start with a general answer. The heaviest tax people are the ones who come to me. Now, if you want to look at industry, there's really no concentration, but I see a lot of physicians. I
hmm
do see a lot of physicians. And overwhelmingly, I'd say 90% of my audience is business owners who
Okay.
face heavy taxes. Varying in size of the business, it doesn't really matter. They're stressed over these taxes. Sometimes I've dealt with guys with 35 million in tax that we have to deal with. And then on the other side is, yeah, my wife and I make 500,000 a year. That's more of a common client.
hmm
And so some of them are wage earners, but not everybody's a zillionaire.
What do you think the biggest thing that people miss on their taxes, or the biggest strategy that people don't think about when it's coming towards that time of year?
So there's a few things. It resonates well, and these are things that you can still apply for 2025, even though here we are almost at the middle of the month, right? So, number one, if you're a business owner, are you funding your retirement plan? Do you have one? Do you have the right retirement plan? Some people think that a retirement plan is, oh, I have a SEP IRA, I have a 401k. Those are good, and they are. For some business owners, they're funding those and then paying six figures in taxes, not realizing that there are other retirement plans that you could put six figures in. And every dollar you put into your retirement plan is a dollar less in taxable income. And it grows tax deferred, and eventually you could retire on that. So the first thing I would say is consider your retirement plan. If it's in place, are you funding it? Is it the right retirement plan? That's number one. Number two, there's this thing called Section 179. These are assets that you could buy now and fully depreciate now. So many people are buying cars. They're writing it off for their business. That's under Section 179. But Others can buy assets leveraged and then get the full deduction. So, for example, if you need $1 million, I'm just using a round number, it doesn't have to be this high, but you need $1 million write-off. There are some programs that allow you to go out of pocket for 100,000, finance 90,000, and now you get your $1 million write-off. You're getting 10x in deductions. So there might be some programs that or some assets that you need that could be under Section 179 or bonus depreciation. Consider those. Farmers are well aware of that. You'll hear things like, yeah, I've got to buy that tractor before the year ends. This is what they're talking about, Section 179. And
Yeah,
then,
farmers, some of that equipment is multi-million, but it helps them to earn more money. So you're saving taxes and you're increasing your productivity. So there are twofold benefits to it, correct?
absolutely. And with our team, we'll probably be close to 100 million, helping clients with 100 million of those assets, believe it or not, who needed that type of write-off, so to speak, but also generating positive cash flow in the process. It isn't just an expense, you sink it, oh, I save tax. No, there's also positive cash flow every month. And eventually, the way these programs work, some of them give you back your money at the end of a certain period when they buy you out. So you have an exit strategy. One last thing, and this is easy for some companies, but others, they just have to really think through it. You can consider pushing the income that you have into January if you can, because now it's into another tax year, right? If you can, move some of your revenues forward into 2026 and pull some of your expenses into 2025. Again, both can lower your potential taxable income. You got to, again, sit down with your advisors and see which, if that at all can be done, but it can be done. It's being done by a lot of business owners.
Yeah, that sounds wonderful. How long have you been in business and in New York? It sounds like you've got a tremendous amount of experience, and that's fantastic. I'm sure that, and the tax code changes all the time, so you've got to stay up on
Yes.
things quick.
Dynamic. Yes, sir. So we've been doing this for probably close to 35 years now. I started out as a banker. I was a banker for about 5 years, but as I was a middle market banker, which meant I loaned money to middle market companies, 10 million or more. All I would do is sit down with CPAs and share thoughts, ideas, and hear about companies. And I continue to work with CPAs. I've been sharing strategies with CPAs for that long, and I've probably met with north of 3,000 by now in my career. So what I do is I share thoughts with them, concepts with them. I am a sounding board to them. Michael, I've got this client. Here's what he's dealing with. Here's what she's dealing with. Anything we can do to help. So that's where I start sharing thoughts.
Now, what about, because we're a men's clinic, as a business, you deal with businesses. I talked to your son earlier when we were talking, it's like, the bent for men. Now, a lot of my patients, guys in their midlife, going through divorces, are there any divorce strategies, or most of that's off the table, that you worry about prenups or any of that deductible for middle-aged men
Yes.
going through divorce?
So I'll share with you one thing that most people, when I say most, I mean 99% of the population knows very little about. It is something that billionaires are familiar with. And it's both tax planning, estate planning, and frankly, protects their assets. So there is a strategy out there. A lot of younger athletes, agents will bring this to my attention, right? My young athlete is doing well, but I'm concerned about lifestyle. And at some point, he could get wiped out if he makes the wrong moves. So is there something we could do to protect him? Yes, there is. There is a concept that I'm a fan of, which combines LLC taxation with charitable giving. And we create this LLC and we put assets inside. The assets inside grow predominantly tax-free. And here's the answer to your question. It is outside the reach of personal and business creditors.
Okay.
So the poster child for something like that, a guy by the name of Mark Zuckerberg, who put in all his Facebook shares into this type of structure. I think it was, at the time, it was 50 some odd billion, and this was 2015. This is before going public. So all that appreciation of stock, every asset you put in there, outside the reach of personal and business creditors. So if you put the assets in there, eventually you get married and things fall apart, they can't touch that.
That's interesting. Now, do you have to maintain some sort of giving, I would imagine, through that, or some sort of mission through that? Um,
Yes.
kind of,
So yes,
is that a 501(c), or is that a different structure?
so it's just a regular for-profit LLC, but in this strategy, you're donating limited partnership units to a nonprofit, a 501(c)(3),
Okay.
but it's still a for-profit. It's still a for-profit LLC. It just so happens that literally 99% of the shares are owned by your nonprofit partner. So taxation follows ownership, right? So if 99% of this LLC is owned by your nonprofit, that's how much will flow through their tax return from the income of this LLC, and they will pay no tax.
So
If you
that 1% would be you as a general manager or managing partner.
That's correct.
So the 1% is owned by the individual and the 99% is owned by the
There
501(c)(3).
you go. And how do they benefit? They benefit in a couple of ways. One, their balance sheet just grew by 99% of your asset, right? It's
Mhm.
great for those who are raising funds. Think about that for fundraising. Number two, now there has to be charitable intent here or it doesn't work. The IRS will clamp down on it. This is something that they're very sensitive to. So we have our clients paying anywhere from 5 to 10% of the profits that come inside this LLC to that nonprofit. It's a charitable gift that year.
Wow.
So if your LLC makes $1 million, you're donating 100,000 to that nonprofit. And you gladly will do that because think of all the taxes you saved instead. And this is what you're gifting. Go ahead, Neil.
So it's very interesting, Michael, since working together, that lots of accountants, accounting firms, CPAs just don't know these strategies, right? They have no idea about these.
That is correct. And some know a little bit about it, but they dismiss it because I don't want to stick my neck out for my clients. Something goes bad, then it's a reflection on me. There is a big mindset with a lot of professionals who think that way.
Very interesting.
Now that we're mid-December right now, how would someone is in the middle of a big tax year and they don't know what to do? Is it too late for them to get a hold of you at this point? Would December 12th we're at right now as of the recording?
It's not too late. I'm still meeting with people and they're still getting their write offs and deductions these last few weeks of the year. But we do have to talk very soon because this isn't just like, here it is, yes or no. No, these are legal moves that they're making. They're investments that they're making. They have to look at it. Their advisors have to look at it. They need to be comfortable in their due diligence, and they should be. So they just don't have the luxury of a lot of time to sit and ponder.
Yeah. So what
Yeah.
advice would you give to someone who needs your services, who has an accountant and they want to work with you in particular, that their accountant need to call you or can they call you personally and connect you or all
Yeah,
sorts of things I would imagine you get put on your
I
plate?
ideally I would have a Zoom meeting with both, but oftentimes it's just the taxpayer that I'm meeting with first. And oftentimes they're like, look, the stuff I share is established in the tax code. Okay, so I'm not into loopholes. We're very much into the black and white, and that's how we share things. But ideally, I would love to sit with both the CPA and the client and the taxpayer. But if not, I'll just sit with the taxpayer. That's not a problem.
Hmm.
Because again, you know how to speak that language, Michael, with the accountant to explain what it means and what's happening after
Yes.
they meet with you. Now, what's really interesting, Dr. Jack, is that a lot of times people just feel like they're over flooded. They can't go invest next year in the business because they're going to be paying too much in taxes. This is where sitting down with Michael and his team is huge, Dr. Jack.
Yeah, you've opened my eyes. When Neil introduced me to you, I wasn't exactly sure what angle you came from. So you're a layer deeper into the process, into the business planning, the tax business planning, leveraging those tax dollars for you, not for the government.
There
You're
you
taking,
go.
I mean, I'm all for paying taxes, but a fair amount of taxes. And if it's appropriately used, and I think even if you're socially conscious, you using your money in a socially advantageous way is huge. It's better than the government will do. The government's full of waste, in my opinion. So you can do your part for society as well as yourself by leveraging those tax dollars to improve your business, to keep your employees working. I'm sure a lot of people are struck with that. You want to keep the company family together. You want to keep your workers, your loyal, the people that have been loyal to you for years. You want to keep them around, but it gets harder and harder as that tax bill comes up. People are automating, people are letting people go. So this allows you to keep investing in your business and growing your business while helping others.
Yes, so just a couple of thoughts came up as I'm listening to you. One, as the saying goes, pay unto Caesar what is Caesar's. Like you said, and I'll paraphrase in my words, we're all in favor of paying our necessary taxes. What unfortunately most people don't know is they're paying Caesar more than he's asking for. They're just uninformed. That's
Mhm.
one. And two, consider your audience. Men, what is the number one source of marital conflict?
Money,
Finance.
money.
This is an area that really could minister to many households, especially those who are the higher wage earners and the business owners, et cetera.
Yeah, and if you're paying that out in taxes, that's better utilized for yourself and your family. And
That's right.
you're right. The government I'm big fan and highly in favor of responsible government and responsible paying. But you constantly hear these things that like, oh, he's not paying taxes. He's not paying taxes like it's some horrible thing. But you also see the reports of what is the government doing with those tax dollars, so an appropriate amount of taxing is probably the way that you should try and structure your company.
Yes. So if you look at, I think, the top 20 earners in the United States, and you look at their effective tax rate, it's somewhere around 5%, 6%. Think about that. Why is it? Like you said, most people will look at them and say, that's why I pay the tax. No, these guys, these ladies, they have access to the best information and advisors out there. And oftentimes, what I've seen is that we do provide strategies. People like them, but they're afraid to move on them.
Mm-hmm. Oh,
So
you're right, because you want to have some backing behind you that if you get audited, you want to have someone like you, someone who's thought through the process, who has the tax code that's going along with this decision. You're supporting your movements with laws, not, I didn't know, I thought I could do this. You know what I mean? Shrug your shoulders and play dumb and mea culpa, maybe try and get the auditor. You say, no, here's the tax code that I've used to implement this strategy moving forward in 2026. And we planned this in advance. And then the auditor, I would imagine, has got to bow to it and say, oh, okay, yeah, there you go. Is that something you see? Someone gets audited and you've got the proof behind you to save the day, so to speak?
So that's an excellent question, but here's the reality. My stuff is black and white, so I don't hear about my clients getting audited at all.
Even better.
There's probably been two or three all these years I've been in practice.
Right. And everyone has that fear of auditing. And I've learned this from my colleagues, especially Michael and all that. If you're not getting audited at some time it happens, you'll have all the backing and you won't have to worry about it because you have everything. That's why working with professionals and not trying to do it using TurboTax, going and getting a tax professional that prepares it with having tax strategists like Michael will make your life so much easier. What I learn, and like from the captive insurance to all these different things, especially people like your practice, Dr. Jack, that the things that you could have, I talked about some of the other programs Michael works with, and one of them is involving, we talked about this, it'll come to me in a second. I brought it up to you.
Buying equipment, buying capital.
No, equipment's one, but the
Yeah.
other one is involving the credits, R&D, especially what Dr. Jack does. There is a definite opportunity for R&D. So definitely you guys need to connect further on these things and instead keep your money you deserve. And that's why the motto of Reignstorm Group is reduce or eliminate taxes. And that's such an important thing because that you got to figure out something, especially the time and effort that a business owner or a high net worth individual works. They deserve to keep more of their money. Okay.
Yeah. Thank you so much, Michael. It's been great having you here. I know we got to let you go. You got stuff to do. I'm sure you're busy this time of year, but we really appreciate you coming. And it's perfect timing. I'm glad we met and hopefully we can continue to talk in the future.
And what's really great is they can go to reignstormmediagroup.com and you can basically go ahead and schedule a call with Michael today. You also can DM me or DM Jack and we'll connect you to Michael. Appreciate it. And go to theultimatemensclinic.com. Like and share the Ultimate Men's Movement. We appreciate it, everybody, guys. Okay, that was a special simulcast of the Neil Haley Show and the Ultimate Men's Movement, guys. Take